It's snowy in New York, isn't it?
Race.
Good and chilly. Jim's on the move.
Yes, I am.
Fantastic. Glad to have both of you here.
Yep, I will probably be signing off as I'm with family, but I wanted to stop off for a little bit.
Understood. There'll be a replay always as well if you want to just check in with that after the fact, Jim. Do you have
Great.
family in time to spend in town spending the holidays with you?
No, I went to family in Nashville.
Ah, wonderful.
It's a great place to visit.
Yep, we're on our way to eat because they're old and we're eating now.
Aw.
It's dinner time.
It's dinner time. I'm eating after this, so
Oh, there you go. And I'm in Hawaii, so it is barely noon here. So
wow.
Still the morning.
Yeah. Yeah,
doesn't that
country
sound
weather's
just
a
like
heck of a lot better.
Christmas? Christmas time, right?
Yeah.
That's because with adult children, you have to have everyone off of school and work at the same time. So,
Yeah.
all right. Well, we're
Line them all
excited
up.
about this. I'm going to have to say it's a little nerve-wracking for me to come in and be like, okay, what's going to be thrown at me as far as questions? And yet at the same time, realize that the organization and structure of finances makes it easy to answer the questions once I have a really good understanding about where you're coming from. So I'm going to start with you, Jessica, because you asked the question. Your biggest concern is if you're tracking the right things and doing your forecasts correctly.
Just get some
And
cheesecake to go home.
I'm muting you, Jim, for
okay.
now. We're
'Cause we
glad
heard
you're
about
here
the
with us,
cheesecake,
Jim.
Jim.
Okay, thank you. Sorry.
No worries.
Cheesecake sounds yummy.
Yeah,
All
it
right.
does.
Okay. So I want to put this in context because some of our numbers has been around for 17 years. And so there are things that we barely started tracking 4 years ago because we were finally at that place where it made sense. And when you're running a business, there's always a problem to solve. I think that's part of why we like entrepreneurship is that we do like the constant barrage of like, hey, something's new every day. Hey, I can solve problems. And a lot of the times we get to a place where we're like we're just unflappable. It doesn't like emotionally it doesn't put us in a tailspin when things get thrown at us. People who don't like that really end up wanting to just like I just want to know what's expected of me when I go to work, and that's all I want to deal with. And so they don't go into entrepreneurship for it. And it's great that there's both types of things. And as an entrepreneur, most of the time you can make the decision of like, you know what, this isn't for me. In fact, my husband was one of those people where he's a physician. He decided to open up his own clinic. And he, about a year and a half in, he was like, I hate this. I
No.
absolutely hate this. And it's because he was trained to be a doctor. And he's like, I don't want to worry about the photocopy machine going down or what type of binders to use for the medical records or what the new Medicare laws or whatever all of those things are. And it was such a good thing because I said, you know, no amount of money is going to make this enjoyable for you. And if you're not doing something you enjoy, then it does feel like work. So, when I'm going to get back to your question of what is the right thing to track. And if you think of things of in the sense of you cannot survive unless you have air. So if you are in as a person, and I'm talking about the human body, and you are underwater and you can't breathe, you definitely are not thinking about what's for dinner because food is not of the concern for you. Air is. But if you have air, then you're thinking about what I need food for nourishment and what am I going to eat next. And there is this hierarchy, and there's a whole chart of this, and I can't remember what it's called, but a whole chart about as far as we don't think about, like if you go to third world countries, they're not thinking about how am I going to get to work if they can't feed themselves or whatever else it is. You know, we in America have a very different sense of what's critical to us and what we track and stuff versus a third world country. Businesses are the same thing. And it starts off with, do you have sales? And sales means that there is actively people trying to purchase your product. people, whether they purchase it or not, that there is activity in that. And until you have activity in that, like, then it's why even worry about cash flow, because you can't worry about cash flow until you've got sales, even though they come hand in hand. So in the sales piece, if there isn't a steady, consistent demand, and that could be all over the place when I say consistent, because businesses are different, then you can't start tracking other things, because that means I don't know where the next dollar's coming from. So therefore, why should I even think about whether I should hire someone, blah, 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 whatever else. Then it gets to, all right, that goes around marketing, awareness. Do I have a website? Where are my top clients? All of those things to be able to say, where is my sales going to come from? Then we get into cash flow. Comes the next thing of, do I have enough money coming in at the time my expenses are going out? Then after that, do I have systems to track all these things? And then we just get deeper and deeper and deeper. And the thing about business is you go up and then you go down, and then you go up and then you go down. And we just went through this in this last year of, our sales they were not coming in on a consistent basis. So we stopped paying attention about everything else and just focused on our sales. And this is after being in business for 17 years. So when you ask the question of, am I tracking the right things? The first and foremost is to say, where is my biggest pain point? And you start there. My biggest pain point is um, cash flow or sales or paying payroll or whatever else. And then you start saying, I'm going to start tracking that so that it frees up my mental energy. Can you see why that's different for every person? And once you can free up the mental energy, then it's like, okay, I don't have to worry about that. I've got that in a system that I'm tracking that. Now the mental energy is there for you to scan the horizon and say, now what's the next thing I want to improve in my business? And whether it's, I've heard, if you're not growing, you're dying. I don't know if I believe all of that. Whatever honestly believe in constant and never ending improvement, just in my personal life and my family life and my business life, is there's always something that can just be fine tuned. So when you start tracking, it's what other pieces are going to play into the pain point. The next part to track is, are my expenses lined up with the size business that I have? Because as an entrepreneur, we get into a place of, but I need that, and I need that, and I need that. And we have to ask ourselves, why do I think I need that? Well, that guy said I needed it, or my brother's best friend said I need that, or I listened to this podcast. And at that point, it's when what will end up happening is our expenses will grow, 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 grow. So I'm going to say for every single business, regardless of the size, definitely needs to be tracking the amount of expenses they have, specifically their overhead expenses, meaning if I don't have any sales, I still have to pay that bill. So that comes into like your web expenses and your telephone and your utilities and your office supplies, all of those, and really challenge yourself. And my thing on tracking it is, if it doesn't seem to be in line with where the cash flow is, that you say, can I go one day before I buy that again? Oh, I did all right. Can I go 1 week before I buy that? Huh. Can I go 1 month and see where that threshold is? Because that takes it from a need to a want, or oh, I don't even need that at all, period. A great example of this is that we had a day and time where people were like, okay, let's just say I'm going to be the adventure company. And what ended up happening was people would go in and buy adventurecompany.com, adventureco.com, adventurecomp.com, advcompany.com, and they bought all of these domains because it was only $20, $20, $20, $20. And then we saw those expenses on there for 15 years. And it was like, why are we still paying for those domains? Well, my competitor might get it. Well, at that point, you want to say, if you've been around for 15 years and people know where to find you, do you really think your competitor's going to get it? And is it going to make a difference? So those are things that I challenge on at any point. Step away from whatever financial statements you have and go look at your bank statement, your credit card statement, or what I'm going to call a detailed general ledger or a detailed profit and loss. And you look at every single line item and say, do I really need that? Could I do without? Could I turn this off and see what happens and then turn it back on? Because some things have consequences and some don't. So that for everyone has to be always part of what they do, is tracking our expenses. And especially in this day and age where it's so easy to buy something and then be auto charged all the time. The next piece that I'd say are the right things to be tracking are to, if you're in the sales, to say, how much did that effort give me a return on? Did I need to print business cards? I never give them out. People throw them away. We just exchange phone numbers in a text or whatever. And so you start tracking. Back in the day, they would do a special 1-800 that was only in the yellow pages. Like, we're going way back in time, and they could track how many phone calls came from that 800 number. And then that was their way of tracking, hey, that yellow page ad of when yellow page ads were expensive, that yellow page ad of $2,000 a year brought me 5 phone calls or brought me 100 phone calls. And so those type of things are important depending upon what stage of business that you're in. So unfortunately, Jessica, you get my emails that give you something else to track every other week, and it's very
Yes.
overwhelming. Yeah. And I know where this is like, it's like, I should be doing this. I should be doing this. And it's like, maybe you shelve it and say that doesn't apply to me right now, especially if you're not a numbers geek that loves to track stuff like that. But it doesn't do any good unless you're tracking something that you're going to make a decision off of. So, and eventually it gets to a place in your business where you're like, okay, I need to track that now because that's part of my business. Does that help you?
Yes.
I know it was very open-ended. It was very open-ended. So, I'm going to say the other thing that I like tracking is I'm always looking for patterns. So when you're tracking what, like, if it's like if your business is dependent upon the season of the year or events of the year, is to like a HVAC company, I'm like, I want you to track what the temperature is outside and then correlate that to where your spikes are. Because after a few years, you're like, hey, the third week of March, we always have people calling and we're never ready for it. There's a roller skating rink in Michigan. And when the weather gets nice in the summertime, nobody comes indoors. And every year they would not adjust quickly and they would lose about $10,000 because they didn't send their employees home because they didn't adjust. And we could narrow it down to that 1 week. So this coming year, we said, the week is coming up, the week is coming up, put everybody on notice because we could see it and we could see and it had to do with the weather, and it was like, this is when we lost all of this money. But
That's
you
crazy.
didn't have that until 3 years in, and that's very very specific to that business. But to save $10,000 because you didn't send people home, and they're teenagers and they are glad to be sent home. It's not like they're working people that are like, no 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 no, I have to work. um so any follow-up questions to that?
Is there any chance you could look at my numbers?
Oh, I probably could. I probably could. Do you want to do it on this call?
I can. I mean, I just have to
Okay,
share my tablet screen,
that
right?
would be just fine. Is it just Jessica and Jim right now, anyone?
Jim has
Jim's
hopped
actually
off.
gone.
Yeah.
Okay, so
So
let's
it's
do it,
just
Jessica.
me.
Let's do it. Yeah.
All right. Do I have?
Jessica, what does your bookkeeping look like? How are you tracking your numbers? Are you in spreadsheets?
Yes. So share screen, start, and then all right, so that's my forecast. I don't know how well you could see all of this, but
I
like
can
those are
see
all
all
my,
of that. Yep.
okay, cool. So I got my tabs along the bottom. It opened my forecast page because that was what I was looking at last.
Okay, so we're going to look at this. We're in the month of December. And then this is the forecast. So November's already passed. Are those actual numbers or that was just part of the forecast that you didn't update?
Those
I
are the
mean,
actual numbers from November.
all right, very good. And so already when you look at your forecast, then I can see that you have lost $1,000. Is that correct for December, or that your forecast you estimated $1,000 less?
I think that is completely correct. Yes, those are so one thing about the revenue deposited, it's a month behind actual earnings.
Okay.
Because like all of my revenue from October would get deposited in November, all of my revenue from
Yep.
November gets deposited in December. So for whatever
That's
reason, I
okay.
had a really good month in October, and that's why, I mean, my months are not usually that good.
Okay. Can you tell why? Do you know why October was so good and November wasn't as good?
No clue.
Okay. All right. So that would be one thing that is to just watch and say, all right, can I? And sometimes we know and sometimes we don't know. And so, but when we don't know, then we start looking like, all right, I don't want you to have $1,000 drop. That's 20% of your revenue right there, or a little bit less than 20%. And then you're looking at the forecast of gaining back about $500 in January. And is that because like people have committed to that, or you're not
Yes.
sure? Okay. All right.
But then, so that's Thanksgiving and Christmas would be what I get in
Yes.
December and January.
Yes.
January always sucks, which is why you can see the February
February.
numbers only $2,000.
That's
Because
okay.
yeah, that
So
is every year.
that's okay. And when you realize that, then you can plan for it. And
Yes.
so the fact that you've got that is great. For you, what that means is I've got to be setting some money aside to get me through the month of February because I just know it's going to be less. So
Yeah.
you're going to always want to have a reserve account. Okay. Then it says transfer to 5920, which is
The expense account.
OpEx, okay. And then your salary is what you need to live off of. And then the
Yes.
employee compensation is for,
Employee payroll.
okay, very good. All right. So at this point, we're going to look at OpEx here, and that came over. I can see that. And then what is 1273 is the credit card. Great.
Yes.
Federal payments and state payments. Are those taxes
Yes.
for the employee?
No, those are estimated quarterly taxes.
Okay. All right.
Employee taxes are already pulled into employee compensation, like it's all in that one line.
Okay. And then you've got the loan payments there. All right. And then the credit card is going to be advertising, insurance, legal, coaching, memberships, taxes and licenses, other, and then the interest and miscellaneous. Okay. All right. So it's wonderful that you've got this is beautiful, and this is really nicely truncated for you to see what is going on in here. So at this point, what you would do is say, all right, I've got 343.37. Aowen, do you have a calculator there that you can just like punch these numbers as I talk?
Yeah, let me pull it up. Okay. Okay, I'm ready.
All right, we're going to do 343.37, 268.
Sorry. 343 and 37 cents. Yep. Plus.
Plus 268
Yep.
plus 249.
860.37.
And divide that by 4,000 $845.
0.177.
Okay. So Jessica, what that tells me is that your operating expenses for 1 month, and I know that's not the whole thing, are beautifully low. Because I want for you to have them be 30% or less. And I've taken all of those numbers. Now, obviously, I can see advertising's a little bit more there, and then insurance comes up later. So
Yeah.
at any point, you're going to go through and say, all right, for all of my total revenue that comes in, how much are going all of those other expenses, the interest, the everything in the blue section, and almost everything, yep, and everything in the orange section, and say, what is my percentage? As long as it's under 30% and you keeping it there, then you're like, all right, I'm doing just fine. I'm doing just fine. And I'm right in line. That's what I would be tracking for you on
Okay.
this.
Okay.
Then the other thing I would be tracking is that you've got this beautifully outlined, and maybe you would put after the advertising, you would put the number, you would put like what I'm going to call it A, B's, and C's. A's are I
Oh,
don't have any
I have
choice.
that.
I have, oh, you do. Awesome. There you go. You did this already. So now you know this. And at any point, you're like, if it goes, then you can say my fear-free PS membership. I can delete that. There you go.
Yeah, I
That would
actually
be the
deleted
next
that
thing.
one last year.
Look at you go. So that would be the next thing. So you're doing a great job. You're just doing a really good job. So those are the
Any-
things I would be tracking, is just to say, like, did anything creep in here that I didn't need to? I'm
Okay.
gonna say, like, for us, like, we've got a Calendly subscription as well, and we looked at everything to get rid of that, to say, is there a way we could save the $125? And at the end of the day, it was like anything that would replace it would
It's gonna
cost
be
us
more.
someplace else.
Mm-hmm.
And so it's really nice in the day and age we live in that there's lots of options out there for us to help solve our problems.
I use the crap out of my Calendly.
Great. And the other thing I'm going to just say is that there's nothing wrong with trying something and say, I'm going to do a 30-day trial on this. It's okay that it's going to be $9.99, but then you put it and say, make sure you like, I'm going to try this and see if it helped at all and stuff. So
Yeah, actually, while
this
you were
looks really
talking, I
good.
remembered that I forgot to cancel my Microsoft Office subscription. Right.
Which is no small thing. Yeah.
Ugh,
So, and then, as we have talked about before with your business, it's like, all right, when you get to a place where it's like, I'm going to have to hire, then you start saying, all right, when is that? And you can start siphoning money away of saying, okay, if I had another employee or I had this, I'm going to start putting it into a side account to see, could I make it if I made that payment? Like if I had that, and then
yeah.
all right, I've got it there. I can do this now.
Anything else you wanted to look at
No,
while I have it up?
you're doing great.
Okay.
Fantastic with this.
All
And then
right.
just always, as you have more information, the forecast, that's why I don't call it a budget, is like keep it updated. Like, hey, now I know this, or I got a new client, they're not going anywhere, blah, blah, whatever else it is. And then
It
start.
updates automatically.
Oh, good. Good,
Because
good,
all
good.
of these are
Tied together.
yeah, they're all,
Oh,
that's
good.
not a good example, but they're all formulas and stuff that pull
Yeah.
from, there
Other
you go,
places.
pull from different places.
Yeah. Oh, yeah, I can see that.
So,
Fantastic.
Awesome.
and then I also have my actual cash flow and profit and loss thing.
Fantastic. I'm gonna.
So,
I rarely use a cash flow statement, but if it works for you, that's fantastic. Profit and loss is what I usually use. So
yeah, it helps me make sure that I have the numbers
gotcha.
right. Like
Great.
I can look at the numbers here and look at the numbers over there, and if they're the same, then
Then
obviously I'm
you're
I'm doing in the right direction.
perfect. That's great.
Okay.
That's
Okay.
great.
Well, cool. How do I get out of this?
Oh, you stopped. I think you stopped
I
sharing.
think
That's
there
you
it
all
is.
right.
There's the
managed.
button.
There you go.
I've never done that on my iPad before, so.
Oh yeah.
Oh,
That was perfect.
okay.
Good job.
All right. What? I think I just froze. What did
Hmm.
it do?
I don't
Could
know.
be when
We
you
can
stop
see you.
sharing. You look fine on our end.
Oh,
Yeah.
okay.
Oh, more or less.
There it goes. Okay.
All right. Okay. I'm going to go through some of these other questions that were submitted from people that are not here with us. But Jessica, because you're here, you can stop me at any time and say, hey, I have another question. Just raise your hand and I'll stop. All right. Franklin Andrews asked, are there loans that an online business coach or course creator can get to really launch their stuff online? Okay. So I am going to say that this is one of the pitfalls of entrepreneurs. Of if I just borrow the money, then I could just make a whole bunch of money. And the people that do online courses, boy, they just count on you. Like, oh, it's so easy. Do this, do this, do this, and it will just reach everywhere. So right now, I am going to say that there is a lot of free resources between AI and search engines and YouTube and everything else that's out there for you to build your online course, create it, and then launch it without paying thousands of dollars to get a loan to have somebody do it for you. So it takes a little bit more on the front end, but it is not anymore. It doesn't save you from the end result. If you start off at the same place and say, I'm going to spend $8,000 and they're going to have me launched in 6 weeks, I guarantee you, you will not be launched in 6 weeks. I just can guarantee you. And that's even when you're on top. Wouldn't you say that's true, Aowen, for everything that
Oh
we've gone
yeah, we've
through?
experienced that at least a couple times in the last
At
couple of
least a couple
years.
times because it just never goes that way and they count on it and whatever else. So if you have that same 8 weeks and you're like, I'm going to learn this and I'm going to fine tweak this and I'm going to learn this and I'm going to fine tweak this, there is something beautiful that happens because when you build it, you understand all the components. You're like, but I don't like the way that is. Can I figure it out? At the end of 6 weeks, you're probably going to be right at the same place, but you're going to have $8,000 more in your pocket and you're going to have all of this knowledge and you're going to be like, I'm in control and empowered by this. So I'm really going to encourage Franklin not to go for finding a loan so that you can pay somebody else to get something launched and to really try to investigate it on your own and do it yourself at that point and see what resources are out there. Or if you can trade with someone who really knows a lot and just say, hey, can I help you in this way? You help me in this way to get your online stuff. There is an online platform called School with a K, Skool, that is a wonderful place for doing online pieces. But this is the next part, is that there are algorithms out there in every field, and whatever platform you're using to promote yourself, you've got to understand, and you can ask AI and ask search engines, what is driving the traffic to this so that people are attracted to my site and who are purchasing my online course. And sometimes it's the number of users, sometimes it's the number of posts you do on a regular basis. Sometimes it's the engagement that takes place. And then Google and Meta and everyone change everything and you have to learn what the new algorithms are. And we could all like just scream and throw a little tantrum. And at the end of the day, our businesses suffer. Or we can say, you know what, this is the field I'm in. I'm going to learn what it is. I'm going to spend a couple weeks and figure this out, make the adjustments and go forward. Because like I said, throwing a tantrum is only going to hurt you. I think it's okay to throw a tantrum if it's a little short one, and then you move on. So,
Just mini tantrums.
yes,
Little,
exactly.
yeah.
So,
I've thrown a few of
exactly.
those.
Yes. But we are so fortunate to have resources that are there, and then to be able to try it and see, did it happen? Okay, how long do I keep up with this? So that's going to be my answer on that. In fact, I'm going to say anytime someone says, I just need to take out a loan because then all my problems will be solved, that you need to say, wait a minute, that's a typical entrepreneur thinks that way. I'm going to take out a loan. I'm going to hire a salesperson. Then I won't have to worry about sales ever again. Well, you know what? That's not the truth either, because a salesperson doesn't think about your business as their baby like you do. And so really be thinking about that. So if you do want to purchase something, I'm going to say, then you start socking away money and say, all right, I'm going to do without, I'm going to do without, I'm going to save that up. And then I'm going to, then after you save it up, then you're like, was that effort worth paying for it? Yes, it is. Then take and go. Then there's no loan. There's no interest. There's no consequences because you've saved up your own money.
Michelle, can I ask a quick follow-up question?
Yes.
One thing that occurs to me that's a little bit in the middle of either take on debt or don't take on debt is Square loans and PayPal loans, or if you do have some revenue to give yourself a bit of runway. I'm curious what your thoughts are there. I know there are some interest costs.
Yeah. So those, they'll call them, oh, I can't remember the name of it now. I want you to be very weary of those because they have hidden things and calculations. It feels like good money.
Mm.
What they're doing is you're borrowing off of your accounts receivable. And a lot of the times, if you see the terms, and this is one where it's like, stop, walk away, read all the terms, it will often say you're paying 30% interest and you're paying all the interest, or there's
Mm.
a prepayment penalty. And so you really get nabbed of, hey, I can borrow the money, but oh my gosh, that was really expensive money to
Got
borrow.
it.
And there is that feeling of an instant relief, but it's not an instant relief, it's crushing. The
Mm.
other part about some of those is they take it out every single day. So you have to say, if I got $20,000, but then every single day they took money back until it was gone, and you could say, like, this would go on until March 15th, 2026. Oh my gosh, like, you have to say, what would this do? And I've
Mm.
seen businesses go under because the debt was so crushing, that they couldn't get out from underneath it. And it's all based on, we are optimists. Most of us that are in an entrepreneurial world are very
Mhm.
optimistic. And so we think, oh, this is going to solve it. I'm going to be just fine. But you have to really look and say, is this gonna help me? Because it goes
Mhm.
on a lot longer than we think. I mean,
Mhm.
if you borrow $20,000, that might take you 2 years to pay it back, of like $2,000 or $1,000 a month. Two
Mhm.
years. And you're like, do I have an extra $1,000 for the next 2 years to just hand over to someone? And you would say, yeah, it would be nice to have $20,000 in my bank, but wait a minute, I don't want that much that I have to worry
Mhm.
about. So
Mhm.
really be thinking about it. So yeah, that was a good question. And yeah, go ahead, Jessica.
I get those emails all the time, and I actually just screenshotted it and threw it in ChatGTP and asked what the equivalent interest rate would be. And you're right, it's between 27 and 32% depending. And I'm just
Like a
like,
credit card,
yeah,
essentially.
like I could literally put that
Mhm.
on my credit card and have a lower interest rate.
There
Mhm.
you go.
No thanks.
Exactly.
Yeah.
Exactly. So I'm thrilled that there's I would have never thought to put it into ChatGPT because I calculate numbers all the time. But the fact that you did that and you're like got your answer, I'm like, great. You don't have to be a numbers guru to figure it out. So
I
that's
sent
awesome.
14,000 messages to ChatGPT last year.
Good for
They did a
you,
wrap
isn't it?
up and they told me that information, and I was like, I didn't need to know that information. I didn't.
Yeah. Oh my gosh.
14,000 messages. I probably talked to the
Wow.
ChatGPT more than my husband.
How
Oops.
nice to have the thing to bounce things off of, like, I just want to know a little bit of that, or at
Exactly.
least get it. And I'm going to say at this point, ChatGPT is an opinion. Some things
Yeah.
it's not all fact, but it's like, at least it gets you thinking, or like, okay, well, I can look at that a little bit more, or ask the follow-up questions. So
Yeah. It's
yeah,
usually pretty decent with basic math.
yes,
Not
absolutely. Yeah, you're
complicated
right.
math. Not
No, there
complicated
you go.
math.
That's good.
And
Yeah,
not spreadsheet
there's some
formulas.
financial analysis stuff that it doesn't say the right thing, and definitely it's not accurate for taxes.
Hmm.
All of my CPA friends are like, do not count, like they throw things in just to
Mm.
see if AI is at the place that and they're like, nope, it's wrong, this is wrong, this is wrong. So don't be like, really, before you take a jump, say, what are the consequences of following this opinion from AI? Because you can't use that of like, well, AI told me to do it. So, yeah.
Yeah.
Mm.
Okay. All right. This is from Jennifer, and this is a great, great question. So she asked, how should I charge my clients? And I'm not quite sure what business she's in.
They're in moving. So I think they specialize in helping seniors move.
Oh,
Okay.
cool.
All right.
Yeah.
So she asked the question first. So let's take the assumption of you're a moving company. How should I charge clients for the miscellaneous packing expenses? All right. You will use packing as long as you have a job, and this becomes a cost of goods. And tracking your cost of goods in general is going to be critical that you price correctly. So I have seen companies that they charge by weight. I've seen them come in and say, look and say, all right, you have got all these books or you've got China or whatever else. And part of your business, Jennifer, is going to be definitely to understand what is going into your pricing. So miscellaneous packing expenses should not be miscellaneous. Room labels, box labels, specialized paper, painter's tape. Those are all part of your business that should be built into the cost. And you, if you don't know how much of that you're going to use for a certain piece, you've got to estimate high and then refund back, or say, I'm giving you this estimate, but these are going to be add-ons based upon what we need, because when we opened up this cupboard, they were all of your grandma's fine china or whatever else it might be. So this for you is extremely important for you to get a handle on this and not let this just be absorbed from client to client. I'm going to dare say that one client is not going, there's going to be some clients that are like, I don't want to be paying all these extra things. I'm basing it on price, and that's going to make me go too high. So at that point, you could say, I'm going to give you my low amount, but then when we get these other pieces like the specialized paper and the um, things that for more breakable things, then just say, I'll bring it to your attention and say, in order for us to keep this safe, there's going to be a surcharge because we were not aware of this. But you're going to need to do your due diligence to price it. Otherwise, you're going to lose money all over the place. I currently charge clients for supplies used in packing, like the boxes, the tape, and the paper, and only charge what I pay for these supplies, as I don't want to pay sales tax. Okay. Therefore, I do not mark them up. I send a spreadsheet with the final invoice. All right. So in this case, the sales tax is going to be an I believe a more, if you're planning on growing, then this is not going to be something that is going to save you in the long run. And I believe that what's going to happen is that somebody's going to have to pay sales tax on some of these products. And so if you're buying the boxes and the tape and such, you're paying sales tax up front when you're buying those. If you're buying it wholesale, then you, as long as you've got a seller's certificate, tracking that and paying sales tax is just part of doing business. I think you're going to lose more money and more time in trying to piecemeal this together with a spreadsheet and the final invoice of everything used versus just paying sales tax. This is my personal opinion on this. And I would love to be able to dive in deeper or have you give me more clarification on what you're asking here. But I have a lot, at some point, we all have to realize that if you run a business, the government's going to get involved and want their piece of the pie. It's kind of like saying, I'm just going to have contractors, I'm not going to hire employees, and then state by state, they're cracking down on that as well to say, no, you can't just have employees. Right now, we're seeing it to where if you hire someone remotely, and 5 years ago, we didn't have this issue. If you hire I live in California, I hired somebody in the state of Kentucky. I have to establish myself as doing business in the state of Kentucky because you pay into Kentucky's unemployment and everything else. It's just the cost of these things. So at some point, you can say, I don't hire out of state or I don't hire in that state. But we're even seeing it now that they want a piece of, well, because you have an employee here, how many sales did you make in the state of Kentucky? And if it reaches a certain threshold, you have to actually file tax returns in 25 different states. That used to not be the case. It used to just be the case. Well, I am a corporation in California. I just file a corporate tax in California. And now it's all over the place. So the more global, the more national we get, then that's kind of what ends up happening. So it is not fun, but it's just a part of doing business. And you can throw your little tantrum for a moment and then just say, all right, what do I need to do in order for this to happen? And then make decisions based upon that. So sales tax is something that every county, every state, sometimes even cities, they're constantly trying to get their fingers into your stuff. And the more that you do, you might just be fighting an uphill battle. Next question on that was, do I charge the client our drive time from our storage unit to their homes and back? I would absolutely say that you've got, when you understand absolutely every penny that goes into delivering your services, then that becomes part of your cost of goods and you know what you should be pricing. That gives you your gross margin. After that point are all of your operating expenses, which means regardless if I have one sale or 100 sales, I still have to pay my general liability insurance or my telephone or my website or my front desk printer or whatever else it is. So Jennifer, I would encourage you to really dial down what else is an expense that I incur every time I have a job and dial down on those and say, this is what percentage I want my gross profit margin to be. And you watch that tight and tight and tight and tight and tight. And I say that because as soon as gas prices go up, you're going to see your margin go down. Or if you, and what did we see when gas prices went up? Surcharges all over the place, didn't we? Because they knew. And we all just said, oh, that's just the cost because gas prices went up. Nobody balked. I mean, we didn't like it, but we as consumers paid that. And so, Jennifer, you can do that same thing, but you have to be aware this goes into that, this goes into that, whatever else it is. So, all right. Next question. When does it make financial sense to switch some key roles from a contractor-based person to a full-time employee? So this is going to be based upon, first of all, your state, that you have to realize what is allowed in your state and what isn't. So in California, boy, it is really hard for us to have contractor base. It was very scrutinized heavily. So that's going to be the first thing, is that you better know your laws really, really well so that you don't get your hands slapped, because that is not an area you want to get your hands slapped in by the government agencies. The next thing is to say that this is a big, big shift when you go from just somebody who is, when you're contracting out to a full-time employee. So I'm going to take it on a very, very large level. And let's just say that you build houses, but you don't do plumbing. So you've been contracting out with a plumber. And you got to a place where you're like, I could hire a full-time plumber and pay less than how much I pay that contractor. At that point, and I'm using this extreme example to put out the points on this. First of all, how do you, when you bring in a full-time employee, you've got to have a structure inside your company to bring on employees. What do we do for time off? When do raises? When do we have employee reviews? What is our culture here? What are our mutable laws and our values as a company? What is the progression plan? And all of those pieces, it's a big step there. And I don't mean to be overwhelming by this, but these are questions that you've got to ask yourself, and every company that grows is going to get at that place. So bringing a plumber on might not be a big deal because you've got a fine carpenter and you've got a drywall person and a painter, and you're like, this is no big deal. We have this system in place. But if you don't have a system in place, you've got to say like, all right, I'm not quite sure we're going to build this into a system or not. The next thing is, how is training take place? Because once they're your employee, guess what? They get paid regardless if they work or not. And so you have to say if they're hourly or if they're salary, and you have to say, all right, how are we going to establish this? And how are we going to track that time? And how are we going to review that time? But we kind of do that when they're contractors as well, because they have to submit an invoice. The next thing is that you've got to see what the burden is of bringing on a full-time employee. And the burden comes in the cost of all of the additional taxes, which I think is at 7.65% on the federal level. You've got to look on the state level a little bit. And then you've got to have workers' compensation in all of the states I think they're all of the states right now. And so you can ask those questions probably by searching on your government agencies, websites. You can ask others. You can call up like HR, probably ask Chat GPT on that as well and say, all right, what other things do I need to factor in? And you don't have to bring on a full-time employee and give them benefits unless that's already in place. So if you have a benefit of health insurance to all full-time employees, you can't have one that is not receiving that. And so looking at all of those things are to say, all right, does this make sense? Now, the best part about that is sometimes it is less money, like in the case of hiring a plumber and saying, all right, I can put them on salary. They don't have to track all of that and I don't have to pay, and they haven't increased their fees to me. But it's not always just a dollar per dollar thing. It has to do with your systems in there before you grow. And we can all say, business is easy until you have to deal with people. And then it's so of realizing like, okay, what do I need in place to have this be the most successful situation possible here? And though we cannot prevent employees or contractors from suing us, what we can do as business owners is put things in place so that if we do get sued, then we don't lose. And so I'm going to just say for all of you that are in business, don't be afraid of being sued. Just say, I've done everything possible. And I've made sure things are safety and that I've spelled this out and I've made all of my terms, conditions, systems very vocal about it. So, all right. Vera Patrick asks, what are some of the things I can do to help stay focused on my goals throughout the year? All right. So the first thing is I see this and say, what are my goals throughout the year? And I'm going to say that it needs to be when I look ahead with my head up, where do I want to end up? Say that's my long-term goal. And then break that back into years. If you have a 3-year goal, then say, where do I need to be on year 1, then on year 2, then year 3? And then break it down into quarters. What do I need to do in each quarter for this year in order to get to where I need to be at the end of that year? And then break it down on a monthly basis. And most business owners have a little bit of ADD. That's why they went into it, because they didn't want to work for somebody else and they could do a multitask all over the place. And so tapping into what your behaviors is very critical. And some of us love to time block our calendars so that we stay focused. And then there's people like me that if I time block my calendar, that is just a challenge to see how many things I can break to break the time block. I'm horrible with time blocking. It means nothing to me. And so I don't do that because I've recognized it and I'm like, that's not what I do. But I will prioritize my list like none other, all the way down to this is 1. You may not move past 1 until you may not move to 2 until you check off number 1. And I am so disciplined with that. I won't even look at what is number 7. I am so focused on what my number 1 is. Soon as that's off, I'm on number 2. But I put a lot of thought into the way I organize that. And sometimes I'll time block and say, this block of time is enough for you to accomplish number 1 and number 2. And then I'll go and time block off and say, this is enough for you to accomplish 4, 5, and 6, or whatever it might be. And I'm very disciplined that way. So there is no one stop. One stop is for everybody. Really identify yourself, work with your strengths, acknowledge your weaknesses, and don't fight against it. Just don't fight against it. Figure out that doesn't work for me. This works. I do know what works for me. And then the other thing is to say, all right, when you are truly focused on your goals, sometimes having an accountability partner is very important as well, that you have to report back. And I think we see that in the weight loss industry and in the exercise industry and nutrition industry, all of those. When you have an accountability partner, then it makes a big difference that someone else is going to know whether you achieved it or whether you're falling short, and they're just there to ask you and keep you on track. Okay, next one. Love this question. How do I begin separating my personal and business finances and checking accounts while living paycheck to paycheck? You do it immediately. If you are running a business, there is no ifs, ands, or buts. You just do it immediately. All money that you make from a business needs to go into a business account. And usually, if you're a sole proprietor, you can just make it a DBA, or you can just make it be another checking account and say, these are all my business. And you put all of the business revenue there. If you need it immediately for your personal, then you take it out immediately. And you can do it by a transfer. So you could have two Wells Fargo's account, and one is all the money went in, and then you immediately transfer it over there, and then all of your personal stuff gets paid out of that personal. You have two different credit cards, and you've got to be very disciplined. I only use there. I took out a Sharpie, and on because both of the credit cards were silver, and I put this is a big B on it. And I knew that if I pulled out the wrong one, because it only took once when I paid for gas on a business card that wasn't business. The gas wasn't for business. I was mortified because somebody else saw that account. A CPA saw that account, and I was like, I can't have that happening. That's when I took the Sharpie out. So do it for yourself and anyone else who can spend money. And I thinking in this case, it's just you. And you just transfer. If you need to transfer all of it, fine, just transfer all of it. Then, if you have a business expense, then transfer it back. Now, all of those transfers back and forth between the personal and business are owner's draws or owner's contributions or owner's draws or owner's contributions, but it's going to be easy for tracking all of that because you're going to have a whole list at the end of money in and out to your personal, fine, but it's just to yourself. And then it's going to have the telephone expense. And you really just start keeping track of it exactly like that. You wait until the end of the year to say how much of what percentage of my computer can I write off from personal and business, but that's not done on a monthly basis. That's something that you get help with to say, and because those IRS changes all the time. It used to be like if you work from home, no problem. Now it's like, do you have a designated place where only work takes place there? And if the answer is no, you can't write it off. It can't be a shared room. And so it changes all the time because the government wants a piece of everything, and everyone started working from home. So it was like, anyway? So because then everybody could write off their homes on it. So, but if in that case you do it at the end of the year, not as you're going on. So if your telephone is used for both personal and for home, you pay it out of your personal. And at the end of the year, then you have the business pay you back for that portion of it when it comes to that. How do you determine your profit Oh, and the same thing. It looks like she's a hair colorist or a esthetician of some sort. In that case, all the tips go into the business account. Be real about it. At the end of the day, if you're a sole proprietor, it all comes out in the wash. It's only you that sees the two different ones. And then as you report on your taxes, then you can do whatever you want to do on your taxes, but you will have a very clear picture as to what's going on if you even put all the tips in there and immediately bring it out if you have to, but just be disciplined on that. How do you determine your profit margin is going to take a little bit more effort, but when you start tracking that and it's like, all right, how you should get to a place where this bottle of hair color lasts me for 2.5 people. These last extensions I go through, I have to place an order every 6 months and I have this many clients. And when you start tracking it down there and it's so clear, then you can get to the point of like, I can see down to how many clients of each type. That's why we see when you go do lash extensions, for example, hey, if it's been 2 weeks, I charge you this. If it's been 3 weeks, I charge you this. If it's been 4 weeks, I'll charge you this. Because we all know what we expect to happen in that time. And I've seen it places too where they go in and say, well, it's only been 2 weeks. And they're like, yeah, but all your lashes are gone. So it's not just 2 weeks, it's a full replacement. So, those are all because people started tracking it and the profit margins just stunk because 2 weeks didn't necessarily, it meant a typical 2 weeks. So you can do all of that, Shelby, by really tracking it. And it might not be fun, especially I'm going to say if you are in the esthetician world, you probably aren't somebody who just loves and geeks out on numbers, but you can get down to that amount where you really know. I'm going to say people who have spas, they know how many pumps out of the lotion bottle is for every massage. They know how much pumps in the back bar. Those are big spas and they know exactly. And we get it down to it's like every blah, blah, blah is 5%. Like we know those numbers. And when it is so empowering then to say, like, all right, hey, we want to try this new product. It's twice as much. Our profit margin's going to change. Therefore, we need to raise our rates by this amount because you're empowered with the knowledge. So don't get overwhelmed. Start small, but definitely split your personal and business and be so disciplined. All right.
I had
Last
a
question
question.
on, yeah.
So you were talking about like splitting personal profit business,
Yes.
Christmas gifts, especially ones that are like not just cash. Like, do you have to claim those as income? Like, or does it just go into personal because
Oh,
it's a Christmas gift? Or
no. When people give you a gift, no, you don't
okay,
have to. No,
okay, because
that's
it's Christmas
no.
time, so I've gotten quite a few.
Until you are a political candidate, you don't have to.
Good to know.
All right. Until you're not getting kickbacks of some sort, if it's truly just a business gift, yeah, you don't have to. So until you get someplace where somebody would put you on the news for getting it, then I think you're okay. So, but yeah. But cash is different. Cash is a payment. It's not a Christmas gift, unfortunately, when you're a business owner. Cash is cash. You can't. Otherwise, we'd all be like, everything I make is a Christmas gift and a birthday gift, and we'd put
And a
nothing on it.
Halloween
So
gift, a Thanksgiving gift. Yeah.
absolutely. And my birthday and my dog's birthday and my cat and whatever else.
I've got
Okay,
3 of those. Yeah.
there you go. All right, Carrie Newman. I am not financially savvy and quite frankly, not good at numbers. I have a fantastic bookkeeper and team, but I don't know how to lead them to a more profitable. What initiative should I improve to improve? All right. So I'm going to say that in theory, bookkeepers are just there to put transactions in and to make sure everything is there classified. If you look at a financial report and you don't know what it is, then you start the conversation. What is in this dues and subscriptions bucket? And I use that because that's right out of the box. It's 100-year-old terminology, and dues and subscriptions does not mean the same. If you have 5 people, 5 different people say that. And then you start saying, that doesn't make any sense to me. Can you change the name of that to my memberships or my software subscriptions or my front office software subscriptions or whatever else it is until for all of the chart of accounts that come out on a financial statement makes sense to you. They are just names and you can change the names of them. And if you use QBO, they're in alphabetical order. And that's why people go to a number system so that they can keep them in the order that makes sense to you. So advertising is always listed at the top, followed by auto. And that's because it's AD and AU. But if those are things that don't matter to you, then you can put a Z in front of it, it'll be at the bottom. That's not exactly a great thing, but for the most part, your bookkeeper will also say, hey, we need to keep this separate because IRS laws changed. But at this point, you've got to start the conversation to where you know what it is that make up that number. So when you pull it for the whole year and it just says sales and a number, if you have different revenue streams, you have to, but I want to know what my recurring revenue is. Or if you build websites, I want to know how much I earn from maintaining websites versus new clients or whatever else it may be, things that matter to you so that you say, I want to really look at this. And then is it easy to track? And you give your bookkeeper the instructions to track it. The next thing is you go through all of those other the way they are labeled, and they should be categories, not vendors, but categories, and say, all right, I need to understand what that is. Can we rename that so I can see what that is? The next thing you've got to look at is your financial data means nothing until you have something to compare it to. So sometimes you're comparing your expenses to your revenue. Oh, this cost of goods to my revenue. Otherwise, it's just numbers. And then after you do a comparison, well, what is my advertising compared to what I spend on insurance? Or what was my advertising last year versus this year? Or what was it month over month? And so your bookkeeping team can say, you can ask them, what are all the different ways I can do a comparison? Year over year, month over month, year to date versus last year to date, first 6 months of the year versus last 6 months of the year, by quarters, all of these things. Every time you look at it with a different lens, you see something different. And so if it doesn't make sense, ask the bookkeeper. They know all of how to present this, and they also can tell you what is behind it, and then ask those questions. And I'm going to say that one of the best things to do is to say at the end of a certain period, say, I want a detailed profit and loss sorted by vendor, by the name, and then it goes in alphabetical order. And you can say, like, Microsoft, 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 Microsoft. What do you mean I have 2 subscriptions to Adobe? Who has the other Adobe subscription? I didn't even know we were paying for Adobe. You have a login? Oh my gosh, we fired that lady 3 months ago. We didn't stop her subscription. That's the type of things that you can do, and that's just from looking at it in a different way. So, all right, that gets us to the end of the hour here, and when we did it.
We did.
All right,
I
this
had
was really
fun.
good. Really, really
Thanks
good.
for hanging out with us, Jessica.
I know.
Absolutely. Especially
I
like,
know.
the day before Christmas Eve. It was
There
cool.
you go. Well, I hope this is helpful for anybody who watches the replay. And if you get this far into the replay and you want to do this again, I'm more than happy to. I think that if those of you that asked the questions and I didn't answer it correctly, you can see that, or not correctly, but I didn't get to the heart of your issue. You can see how having you be on the call to clarify a little bit more really makes a difference, because then you can challenge what I'm saying or say, hey, just will you look at this number and tell me what you see? So maybe we'll do this again if that, based upon whatever feedback we get. So, but happy to be that resource for all of you. I hope you have a Merry Christmas, Happy New Year. Enjoy this replay, and we'll see you in January when we are doing our next one that is on taking a 4-week vacation, how we would do that and have our business be able to be okay. Which is not,
I haven't had a
it's
day off in 178 days. So
I know. Well, there are pieces where not everyone, I mean, that's a different stage of business, but anyway. And then if
Merry
this is
Christmas.
something,
And
I am
you.
gonna put the plug in for our CFO circle for those of you that feel like it's a good investment. This is what
Yeah.
we do every Friday at 9 o'clock Pacific time, where it's like I'm just here for a full hour and it's anything goes. I try to keep the price realistic, but I know that it's not everyone has the budget for it, but that's just so that you've got someone to ask anything. Oh, at least
We also have a
think.
couple of folks who've expressed interest, but the scheduling doesn't work out. So you guys can
Yeah.
plan in advance. I know for you, Jessica, you have a client and there's a conflict,
Yeah.
but for those who might have some flexibility and you can plan around it, I am just going to pull up. Let me see if I can share my screen momentarily with these QR codes. And folks who are interested can just screenshot this on the recording. There we go. Screenshot this on the recording, depending on what's interesting or useful. Yeah. Okay.
Yeah. All right.
Thanks, Michelle. Take care,
Okay.
Jessica.
All right.
Bye. Merry
Bye-bye.
Christmas. Happy New Year.
Thank you.
Bye.